Good morning and welcome to the Saxo Bank Morning Call. It's Monday, February 25th, 2019, and we have a very interesting start to the week with an apparently rather tremendous tweet from Mr. Trump late Sunday where he is saying that he's happy to delay this March 1st deadline. It was being softened up anyway, this deadline, due to supposedly the tremendous progress on these U.S.-China trade terms, or the deal that is supposedly coming soon. And of course, the biggest reaction, not of course, but the biggest reaction apparently in Chinese markets. Peter, what's going on here? We've gone parabolic in Chinese mainland equities.
It seems like we are going parabolic. I mean, we are up 8% in the CSI 300 index futures. And if you look at the Chinex, which is this board of small cap stocks, we are also up around 5 or 6%. And the same goes for the Shanghai index. If you look at this chart we brought with us, you can see the red line is the 200-day moving average, and you can just see we gapped higher, massive gap opening on this Monday, and we just followed through. And I think we basically closed. I think this is probably a little bit delayed, maybe, but I think we closed at the actual high.
Higher. Yeah, it was a little higher. Yeah. And then you're doing some comparison here. We see the mainland chart here. Of course, the Chinese equities, mainland equities, up, enormously indexed to around the beginning of the year. They're around 25%.
Yeah.
Whereas other markets you're noting in Asia are lagging a bit.
Yeah. The yellow line here is the S&P 500 index futures, and the red line is the Kospi 200 tracking South Korea. And I actually brought this with us together with Ole last week just to highlight the same thing. But now it's getting out of this world. I mean, I think other equity investors are looking at the Chinese market and cannot really believe what they're seeing. And unless we see a follow-through from either South Korea or Germany, and maybe Japan, which is the most heavily dependent on growth in China, I don't think this is sustainable.
Elsewhere out in Asia, the mood not so good. You've highlighted Indian equities here.
Exactly, because China's weight in the emerging market is now so big that it pulls the weight in the emerging markets. But although elsewhere in the emerging market, we have India. If you look at this chart, it's signaling that something is not really well in India. We know the central bank is quite worried about the financial conditions. We have a very strong dollar. We have had a squeeze on interest rates in India, and it's really taking its toll on growth. And you can see that in the index. This is local prices.
So Indian rupee terms as well. And then on the DAX, so we're sort of rising in sympathy with the major indices around the world, but it's not particularly impressive relative to the cycle highs.
No. My main stance is still be defensive on equities, but we cannot ignore the short term. If we make a breakout today, given what we just saw in China, and if else news will support this, I would not be surprised that we stage a breakout here, and you could grab a couple of few percentages here in the DAX futures.
So there's a celebration across risk appetite, but the oil markets are not really sort of joining in on the excitement here, at least the last little leg of it.
No, and I think, John, I like your comment from your update on Friday that the market is rallying, and they're basically struggling to hear the drumbeat of economic data, which continues not to be that supportive. And I think the oil market is starting to see some bit of macroeconomic selling coming into the market. So we're holding above some breakout levels last week, but we really need to break above 60 on WTI and 68.50 on Brent. I think we're going to struggle to do that here in the near term.
Okay, I think the one thing that certainly is helping to drive this market is a very supportive backdrop in terms of central bank signaling. The latest on Friday, we have the Fed Board of Governors, Clarida, out talking about loosening the Fed, looking at the future of policy mix, loosening up its commitments to inflation targeting in terms of allowing inflation to run hot. What do they call it? A makeup policy on inflation. And as well outlining the idea that the Fed could look at these yield cap techniques similar to what the Bank of Japan has done. It's so interesting, we've gone from a rate hike in December to basically a laundry list of here's all the crazy stuff we can do in the event the inflation is not picking up and the economy is doing poorly. Meanwhile, markets are raging higher. So I have here a 10-year future chart here where it looked like we've just gone back and forth really in a constricting range, but it looked like the previous sell-off on Thursday, that latest black bar, maybe setting up a test lower, but then we just zoomed right back around on Friday. I think the Fed adding to that support for treasuries. And as long as these yields are low, it looks very supportive for risky assets if those yields are low because central banks are talking up easy policy. Briefly on the FX side of things, we're really stuck here. It's really interesting to see the degree to which FX is stuck. Yes, you see sort of the weak yen the combination of basically supported by a very strong risk appetite. But if you look at something like the Australian dollar, we have a huge support from commodities. Ola talked about copper last week. We've had this big rally recently in iron ore, the huge miners in Australia up at new highs. And yet Aussie dollar really stuck because you're being pulled in two directions at the same time. That whole mining picture, very supportive. But then on the credit cycle, the housing bubble side of things and the outlook for the RBA and the worry that eventually we look at something like the RBA at very low rates, potentially even QE to clean up the housing bubble mess, and you're just left without anything to do there. I think the eventual risk is lower in Australian dollar, but we really need to see, I think, a shift across risk appetite. And that's another thing. This risk appetite hasn't helped the Australian dollar as much as you would historically expect. Finally, on FX, I wanted to point out euro sterling. We're trading here at the lows of the range. We've got this latest news over the weekend that May will try to delay the deal, the vote on her deal, whatever she manages to put together in terms of an alteration to the existing deal, to March 12th. So getting very uncomfortably late in the process ahead of that March 29th Article 50 deadline. And the EU is now putting together a plan apparently that if they want to do a delay, that delay will have to go through the end of 2021. Supposedly supportive for the pound. I question that a bit because you're talking about extending the inability of businesses to make decisions about investment all the way to the end of 2021, if that's what we get. So euro sterling, we can look at the chart here. It's actually not a very interesting chart. It just shows that there seems to be a hopeful stance on the pound relative to the euro. We're trading at the lows of that range that stretches back quite some way. Ola, not a whole lot going on in the commodity markets, but there has been a lot going on in some of these precious metals, and you're bringing up the focus on platinum now after of course, the noise on palladium recently.
Yeah, what you just talked about the FOMC before and the easing we're seeing there, and that's helping to support metals in general. And what happens when we see a strong gold market? Eventually, we also see the market starts looking for relative value, and I think we're starting to see potentially that coming into the platinum. If you take a look at the chart here on the weekly, platinum has really been under pressure for several years now. But just on Friday, we did see a bit of a peak above the resistance there. The trend line at 830. If we can make it above 877, then it could indicate that we have a low in place. It's being supported by the top right corner there. You can see the discount to gold currently around $480. It has been hovering around 500 for a while. And if you look at against palladium, it's as high as $660 discount. So it basically means that people are starting to look at potentially of automobile changing from palladium back to platinum. I think that's a long process, not going to help anytime soon, but just the talk of it could potentially provide some additional support. So platinum potentially could be one
technical level around 877 there on the previous high.
Yeah. So a strong close on Friday, and if we can make it above 877, it looks like we got some further upside there.
Okay. Peter, we have earnings still going on here. You've got a whole lot of names here on the earnings calendar today. I think that one of the big news items you've highlighted, of course, was the big Kraft Heinz news over the weekend.
Yeah.
Or late Friday, whenever it was.
Yeah, exactly. It was the Kraft Heinz write down and subsequent 27% decline in the share price was on Friday, giving a massive write down to their brand portfolio. It hit the Berkshire Hathaway results in Q4, which was announced over the weekend, because they have to do mark to market now on every single holdings in their portfolio. So that's also why they have highlighted now you cannot use the book value per share for anything else, anything anymore in the Berkshire results because of these mark to market changes in their portfolio, both listed equities, majority holdings and non-majority holdings. If we zoom in on this week's calendar, I think the tomorrow's BASF from Germany, one of the largest chemical companies in the world, extremely cyclical, extremely important for global growth. I mean, the chemical industry is not for no reason. It's not for no reason that chemical indicators are part of the leading indicators. So watch this company for their outlook, and they have a very big exposure to China. And then we have a property, Sung Hong Kai properties out of Hong Kong on Wednesday. I think that's interesting for guidance of where the housing market is turning in Asia and specifically China. And then we have ABB, the equivalent of robotics, automation, power plants, etc. It's very, very much the equivalent of GE here in Europe. So important to watch that.
But perhaps without the debt albatross around its neck.
Without the debt.
Okay. And then on our macro calendar, I think it's important to highlight a few things this week. Let's go to the slide. We have very little today. If you're trading the Kiwi, be very aware that the RBNZ's Baskander, however we say his name, is out speaking tonight on this issue about bank capital requirements. This has been linked to the risk of RBNZ cuts. That was a recent news item that saw the Kiwi on the defensive. So if there's a bit of a more robust discussion around that, that could actually be a significant risk event for the Kiwi overnight. But otherwise, do note that the U.S. Fed's Powell is out with that semi-annual testimony both tomorrow and on Wednesday before Congress. This is multi-hour stuff where he'll be talking about policy and their stance on the economy. So pretty important. Potentially on Wednesday, the Brexit vote, a parliamentary vote in the UK on seeking to confirm that they will avoid at least a no deal, if nothing else, ahead of the March 29th deadline. And a number of other interesting bits and pieces. Tomorrow we have the December housing starts and building permits for the U.S., but these numbers haven't really confirmed signs of weakness in the U.S. housing market that we've seen elsewhere. So that's a bit interesting. And then as well, we have Friday, U.S. Fed's Powell out speaking again with a Q&A and the latest PCE inflation data. So I think there'll be plenty to distract us and the ISM manufacturing as well on Friday. Plenty to distract us on real economic data and as well as the latest signals, which I think the market has been obsessing about so much from the central banks. That's it for today. We'll be back tomorrow with the Saxo Bank Morning Call. Thanks for joining.